All right. Assalamu alaikum, everyone. And thank you so much for joining us on this session led by the SECP about the special purpose acquisition companies. We are joined here today by Ms. Najia Ubaid, who is the head of department of the Primary Market Approval and Development Department. She has been associated with the SECP for about over 10 years now. So I'll just give you a quick overview of what this session is about and about a trainer. So as I mentioned earlier as well, Ms. Najia Ubaid, she works with the SECP and has been associated with the SECP for over a decade now. She's a graduate in capital markets program from George Washington University, USA, and is engaged in the capital market development activities with the Security and Exchange Commission of Pakistan. The primary purpose of this activity or this session and how we're going to go about this is that we will have a discussion, an overview of the SPACs or the special purpose acquisition companies, an introduction by the SECP, how through amendments they have, offered certain regulations. We'll also talk about what the SPACs are. What is the philosophy behind it? Why do we need the SPACs or the special purpose acquisition companies? And this will also have an overview of the regulatory framework, which is, developed by the Securities and Exchange Commission of Pakistan. We will also discuss some of the new additions that have been added to this framework. And in addition to that, while Ms. Najia Ubaid delivers her session, by the end of the session, we will have a question and answer session. So this is a 1-hour session, and the last 10 to 15 minutes, we will dedicate to question and answer sessions. So without further ado, I would now request Ms. Najia Ubaid to formally start the session and give us an introduction of what the SPACs are and take this forward.
Thank you. Assalamu alaikum, everyone. Thank you, Saran. Thank you, NSC. And I really appreciate this kind of efforts, these sessions. This not only engages the public, but also provides us an opportunity to take the feedback from the public. And if some improvements are required for getting forward, the same can be initiated or processed, or we can enter into the discussion specifically how those specific kind of restrictions or impediments can be addressed. So thank you once again. Let me just share my screen to move with the session of, as Saran said, it is SPAC. For me, I generally used to say SPAC. So it is the common name that is used. It is SPAC, Special Purpose Acquisition Company. Just give me a second. Please let me know if you can see my screen.
Yes, Ms. Najia, we can see your screen now.
Good, thank you. So this session is all about special purpose acquisition companies. Generally, the term is used as SPACs. So the first and the foremost is, what is a SPAC? So a SPAC is the structure under which a company comprising of a group of persons, professionals, raise funds from the general public, and these funds are utilized for the purpose of the merger or acquisition transaction within a specific permitted time frame as specified in the regulations or the aligned framework. A SPAC seeks to leverage the strength and recognition of sponsors, management team within an industry or geographic focus to secure proprietary deal flow and identify attractive acquisition candidates. So it's clear that SPAC's purpose is merger or acquisition transaction completion. The question comes to your mind, why one go through the SPAC and why is the need of having a SPAC? First and the foremost is that SPAC is ran by a team of professionals who have this experience and successful track record in their specific industry. So the key advantage is their investment is protected through the escrow fund restriction, which means the investment downside is capped. A successful application enables the investors to participate in the earning of the acquired company and appreciation in the share value. Let me try to elaborate it a little. That means that as a layman, I am not in a better position to understand the benefits that can be derived out of a company. So the professionals who have the underlying knowledge of that specific sectors enter into the market and do the acquisition thing. And I become the investor indirectly of that acquired company, and I can enjoy the risk share appreciation value. That's what is the return on investment. Even the amount in the escrow account is also protected and is subject to permitted investment, which are generally the risk-free investments by the custodian of the escrow account. And it also entitles the investor to return on such investments upon redemption. SPAC investors also have an option to exercise, that is the redemption right. If they don't like the SPAC's proposed acquisition or merger transaction, they can use the redemption or the put option right. It not only allows you to become the part and seek the returns of investment, but it also allows privately held companies to go public in a faster manner. So why we are talking of SPACs right now? So 2021 has seen 613 SPAC listings, raising a total of $145 billion in United States. SPACs represented over approximately 59% of the total new listings in 2021 in US. Lucid Motors, the electric vehicle maker, Lucid went public in July 2021 through a merger with SPAC company. It delivered a market cap around 66 billion, which is higher than Honda. So we have not only this one, I have just elaborated one success story, but there are multiple success stories in the SPAC's history. And SPAC is a new phenomena for Pakistan, but it is not a new phenomena for the country. It's been in place, although it has seen its surge during the last few years. I would say that the surge has been witnessed during 2015 and 2021. So this graph technically again supports the success stories of SPAC. This graph actually shows the time to completion in the US. It's evident from the graph that for the last 5 years, the SPAC completion rate is more than 80% of the SPACs completed merger and acquisition transactions. So it is evident from it that this graph shows that on average, majority of the SPAC has been completed within a period of 2 years. And during the last 2015 to 2021, it's above 80%. Yes, I would think like in 2018, it was around 100%. So the SPACs that were launched in 2018 completed their acquisition transaction, 100% of them completed their acquisition transaction and within a period of 2 years. So how is a SPAC formed? SPAC is formed by professional sponsors. It is in the form of a public limited company. As per the regulatory framework that SECP has recently introduced as a chapter in the public offering regulations 2017, and it is again a new concept, it requires that the public limited company should have at least 10 million rupees as its paid up capital. The company, again, it has to be in the company structure. It can be registered online through e-services portal of SECP. What is must is that the principal line of business of the company is to raise funds from the public offering and utilize those funds for merger and acquisition of the company or companies within the permitted time frame. So the permitted time frame is 36 months. Listing application and fundraising. It provides an option for the companies and the acquired companies to get listed through the acquisition by the SPAC. So it provides an option for the SPAC to raise the funds. What a SPAC does, SPAC gets itself registered as a company, appoints a consultant to the issue, book runner, underwriter, share registrar, and other regulated intermediaries required by the SPAC as per the public offering regulations 2017. Subsequent to the appointment of the requisite intermediaries, what it does is it prepares a prospectus in line with the public offering regulations, seeks the approval of PSX, seeks the approval of SECP, and this is the process that we call that it applies for IPO or listing of shares or warrants, either by itself or through the CTI, to raise funds from the general public. There is another additional requirement that requires that the SPAC should raise at least 200 million through the public offering. So the issue size can't be below 200 million. Subject to fulfillment of the regulatory requirements, a SPAC is listed on PSX. For listing, they'll do the public offering. Generally, if we see globally, the SPACs are generally offered either at par or only with a premium of few rupees. Another important feature is that the 90% funds raised through the IPO are to be kept in the escrow account, and the same can be invested either by the custodian or the SPAC itself in permitted securities. I mentioned earlier that the permitted securities are generally risk-free securities, that is like the government securities, mutual funds, again, not equity-based, money market instruments, debt securities, and sukuks with investment grade ratings. Remaining funds, that is 10%, can be used by the SPAC to defray expenses relating to the IPO, operating costs, funding the search for a target business, and completing the qualifying acquisition. So the next point comes in, that is the identification of the target company to whom the SPAC will acquire. So the SPAC is required to identify the target company and complete the merger or acquisition transaction within a period of 36 months from the date of listing. So if the SPAC is unable to find the target, what will happen then? If the SPAC is unable to find the target within 36 months, what will happen? I'll move on in a few minutes to that slide. But if they are unable to find or complete the merger transaction within this time frame or any extended time that they seek and get the approval from the commission, the shareholders will be refunded from the escrow account on a pro rata basis, including profit. Any profit that has been earned on the escrow account shall be distributed among the shareholders in case the SPAC is unable to find the target company. So here is a catch. Here is not a catch, it is an attraction for the investors, and that is that investors' money is safeguarded by keeping it in the escrow account. The SPAC shall then be delisted. It is generally the de-SPAC process, and it will undergo a voluntary winding up as per the Companies Act 2017. Yes. So what are the additional fundraising and sponsors shareholding? SPAC can raise additional funds. So SPAC initially planned to raise 200 million and wanted to get the acquisition completed within that amount, that is 200 million. But if for any reason they are unable or the costs have gone up, for any reason, they are unable to complete the transaction within that specific amount for which the funds have already been raised, they can raise additional funds by the way of right issue or other than right, or through secondary public offering to complete the merger or the acquisition transaction. But they have to justify themselves before the public for doing so. At least 15% of the shares are to be held by the sponsor for a period of at least 1 year from the date of the merger or acquisition. Sponsors' cumulative holding in the target company pre-merger must be less than 30% of the total shareholding of the target company. Again, considering the scenarios of the conflict of interest, this condition has been put in place that they must, the shareholding must be less than 30%, and they must have at least 15% shares held by them for a period of at least 1 year in the SPAC company. So now comes the point where the SPAC has identified the target company. After that, what SPAC will do? It will seek the approval of its shareholders through special resolution for acquisition of the target company. So in order to ensure that the decision taken by SPAC has also been confirmed by majority of the shareholders, not majority, by almost every one of the who is the shareholder of SPAC, this requirement has been put in place that the approval of the shareholders is required. The approval shall be valid through special resolution if 3/4 of the shareholders that attended the meeting have approved the acquisition. So let's now think that there are some people, shareholders who do not approve the transaction. If that is the scenario, and the transaction, so there are two scenarios. One scenario is that 3/4 of the majority has approved and there are few dissenting shareholders. The other scenario is that this transaction, or all the less than 3/4 of the majority has approved. So if that is 3/4 has not approved, then the company will go back and look for another potential target to complete the merger transaction, again within the permitted time frame. But if the other scenario is there where 3/4 has approved the transaction and few are dissenting shareholders, then in that case, dissenting shareholders will get 90% of their initial investment immediately after completion of the SPAC transaction. So this is kind of an additional protection to the investors, that even if they don't like the merger transaction that SPAC is trying to undertake, they can record their dissent and get their investment back. A SPAC can acquire more than one company through the merger or the acquisition transaction, subject to approval of its shareholders. So now move forward. We now have identified, we have created a SPAC. SPAC is a public limited company. They have completed the public offering portion. They have identified the target. After identification of the target, they have completed the shareholders approval. So now what? How the new entity's shares will be issued to the existing SPAC shareholders. So subsequent to the approval of the shareholder, funds are released from escrow account to complete the merger and acquisition transaction. So the funds from the escrow shall only be released once the approval of the shareholders is in place for continuing with the merger or the acquisition transaction. The regulations also require that the fair market value of the target company must equal at least 80% of the aggregate amount in the escrow account. The acquisition is to be completed of the target company is completed then with the funds, and the same is merged into SPAC. The company now stands merged, the target company, in SPAC. SPAC shareholders will get the shares of the merged entity, and the merged entity shall then stand listed. So now you become the shareholder of the merged entity who has its operations in place. Let me just try to summarize the complete process. It is the SPAC formation and the IPO. Special purpose acquisition company is formed by professional sponsors as a public limited company with at least 10 million paid up capital. They submit their application to PSX for public offering approval. This includes the listing of shares or warrants. There's another attractive feature that is called the warrant. So what we have seen globally is, and this is a new concept, again, warrants is altogether share issuance, merger transaction is somewhat familiar to Pakistan's environment, but warrant is also altogether a new concept that is being introduced through SPACs. So what is warrants? Warrants actually is a kind of option that provides you an additional right to equity at a certain point of time on occurrence of a certain event. So by investing in the shares of SPAC, if warrants are attached, you will also be able to receive the warrants. So subsequent to the approval of listing application by the PSX, the SPAC company shall apply to the commission for seeking the approval of the offering document, that is the prospectus. Funds raising by SPAC through IPO is done through PSX. As of date, there's no restriction that it has to be on the fixed price or it has to be through book building. It can be through any form, but the general practice, since it's a non-operational company, people are investing on the profile of the professionals that have formed the SPAC kind of a trust on them based on their professional track record. So generally, the history is that people used to invest based on the profile, and the shares are generally offered at par value. Then only, like, if, say, for instance, the par value is rupees 10 per share. So what we have seen is that the in globally, if the par value is $10, then it is $11 that is being offered for the initial public offering. But it is not kind of a hard and fast rule, it is just a practice. So the funds raised by the escrow account are kept in the funds raised by the SPAC are kept in the escrow account, and they can be invested in the permitted securities. Then the SPAC tries to search for the target company. The target company search has to be completed within 36 months. If the target company is not found and the merger or acquisition transaction is not completed within the permitted 36 months, the funds in the escrow account, along with the profit on the investment, will be refunded back to the investors. If they have identified, then post-identification, approval of the shareholders through special resolution shall be required. Again, there are two possibilities: whether the shareholders approve or the shareholders do not approve. In case the shareholders approve, SPAC goes for the completion of the acquisition or merger transaction. If it doesn't, then SPAC will start the process of identification as stated at point number 2 of this slide. Then starts the de-SPAC, or the conversion of SPAC shares to the merged entity shares. Acquisition of the target company and the merger of this target in the SPAC is completed, and the shares are then issued to the shareholders. So this is the lifeline. Again, it is projected as of date. No SPAC has yet submitted its application for public offering as in, by the SPAC. So on day 1, a company is incorporated as a public limited company. The IPO process generally takes 9 to 14 weeks. It includes the appointment of the CTI, the drafting of the prospectus. These are the ideal timelines that the company can adopt and complete their SPAC's lifeline. So generally, it is 9 to 14 weeks. By the end of the 14th week, the initial public offering process is completed. The funds are released to the escrow account of the SPAC. The company can now begin the identification of the target, and identification has to be completed within a period of 3 years. At the end of 3 years, if no further extension is granted by the commission for completion of this transaction, SPAC ceases to exist after the completion of the merger or the acquisition transaction. So far, I've just explained the process. I've tried to touch upon the benefits to some extent during the course of the presentation, but have not yet specifically pronounced. So I'll now move towards what are the benefits of getting a SPAC listed for the investors in terms of their investments, for the company that is forming a SPAC, and for the target company. What are the benefits in there? So for this is what is in it for the investors. As I mentioned earlier, that SPAC investors get the opportunity of enjoying the benefit of experienced management and the sponsors with the relevant industry exposure. So if I would just take myself as an example, I'm not an expert in ghee industry or in, for that matter, any fragmented industry. I have taken the name of ghee. It is kind of a very ghee and oil. It is very kind of fragmented sector. So I can look if a SPAC transaction or a merger transaction can take place. That is a probable area where it is. So if I take it and I see that the number of companies are getting merged, and I don't know, and there is high potential in those companies, in their upside, there is high upside in the revenues, and I can enjoy that, but I don't understand the mechanics of that industry, nor do I have the investment capability of getting the benefits from that industry. So what SPAC does, SPAC provides me an opportunity to invest with those senior industry experts and enjoy the benefits in that specific sector's revenue. Warrants, as I've just mentioned, also provide significant future upside. So it provides you the right. So if the transaction is completed, you will get additional 10% or whatever the warrant is. So if it says that against every 10 shares, you will receive another 2 shares. So that means that by the time the transaction matures, the value of the merged entity shares will definitely have gone up, and you'll be also able to enjoy the SPAC warrants, extra warrants attached, and the extra equity being credited to your side. This is in terms of enjoying the upside of the revenue. If, for instance, there is a downside risk, then in that case, your investment as an investor is saved by the redemption right available or envisaged in this model. The access to the investment in acquisitions and buyouts typically otherwise is not accessible. That is being provided through this business model, that is SPAC. Capital is held in a trust account pending approval of the business communication by a shareholder vote or the return of the capital. Benefits from the liquidity of the publicly traded securities and ability to control timing of the exit. So the benefit of this is that the merger transaction will continue. Even if you do not want to continue with the SPAC shareholding, you can offload your position through the shares, through selling the shares through Pakistan Stock Exchange. That means it is publicly traded security, and it provides you an exit opportunity in case if you wish to do so. There are some benefits for the sponsors as well, and that is that founder shares and warrants provide significant future upside to them as well. So warrant shares and the founder shares are generally priced at a discount, and it provides a future upside both to the sponsors and to the investors. Again, the seller is confident that the money is with you in being the sponsor and being the SPAC in the escrow account. So seller is also confident. So it will help in building the credibility, the trust. It will also provide you the kind of sponsor, the flexibility to negotiate, to understand, and to take the merger and the merger and the acquisition transaction. The ability to leverage cash interest and fund larger acquisition that I've already mentioned. More credibility with the seller than with the cash in trust. And that's also the same thing. Now, what is there for the target? Again, it is kind of access to the public capital and experience, sponsor expertise and industry experience. So there is a high probability that subsequent to the merger transaction, the company also starts to get the benefits of the experienced management. And that's why the lock-in clause have been invoked to ensure that it's just not completing the merger transactions. The sponsors and the management that have the experience continue to take up the company until it starts reaping the benefits. With the ability to partner with well-known sponsor team, it provides targets with the potential to retain majority of the upside by being paid in stock, less disruption to the seller, the company, and the employees. So these are some of the benefits to the sponsors, for the investors, and for the targets. One more thing is that SECP has recently issued detailed guidelines, FAQs about SPACs. I would like you to go through the SPAC guidelines. These are available at SECP's official web page, and it contains the FAQs as well. If you give me a second, let me just give you a snap of, just a second, the guidelines. So these are the special purpose acquisition company guidelines, and these are available on SECP's webpage. You can reach out to there. It contains detailed information. It also contains how to get your company listed, what are the modes of formation of the companies, what are the requirements for incorporation of a public limited company, what is the procedure for incorporation of the public limited company, what exactly are the number of documents, what is the object clause that has to be included in the SPAC, SPAC's memorandum and articles of association, exactly minimum paid-up capital requirement, are there any specific fit and proper criteria, where to find those criteria, how to confirm with that criteria, what is the process for raising the funds from the general public, who are the listed CTIs, who are the licensed entities with whom you can engage, what is their role and responsibility. It is a specifically 8-page document that contains each and everything that a SPAC as a company requires to comply with. Are there any minimum amounts that can be raised? What happens after the funds are raised through the public offering? How to identify the target company, or within what time frame the target company has to be identified? What is the process of seeking the shareholders' approval? If the shareholder doesn't grant approval, what will happen post-merger? Again, it's the same timeline that I've shared. Are there any restriction on the SPAC funds, SPAC founders, yes, sponsors? How can sponsors increase their shareholding after the completion of the transaction? How to determine the fair market value of the target company? Escrow, with whom the escrow account can be opened? Who can be the custodian? Circumstances under which funds can be released by the custodian? Can additional funds be raised for SPAC to complete the transaction? What are the conditions for utilizing the debt financing? So there is an element that the SPACs can also utilize debt for financing the transaction of SPAC. But how can and to what extent and what are the restrictions? Can this SPAC acquire more than 2 companies, more than 1 company? Yes, I've also already mentioned. This is again the same flowchart. One interesting element is, just for the sake of the guidance, is that real life case studies on SPAC are also included in this guideline or the FAQ document. So it's kind of an 8-page document. I would recommend and encourage every one of you who is interested in doing this SPAC transaction to go through. So with this, I would like to thank you, and I'm here to answer the questions, to take any queries that you would like me to respond. And a general note is that we are always available here at SECP to help you out, to understand the mechanics, to kind of handhold you in terms of running the business, not only in terms of running the business, in terms of understanding what an investor can or cannot have out of this transaction. Thank you. Over to you, Saran.
Thank you, Ms. Najia, for this comprehensive session on SPACs. One question before we move on to the question and answer session. So one of the things in the startup ecosystem that has taken quite a bit of traction, particularly outside Pakistan, are the crowd-funded startups, right? So while I understand that this is a different domain, but do they somehow overlap in any way, shape, or form? Ms. Najia, we're unable to hear you if you're speaking.
Yeah. So technically not. Let me try to give you a brief comparison of crowdfunding and the SPAC transaction. So crowdfunding is generally for the startup companies, early bird companies. When you say the startup companies and the early bird companies, that means they have some idea or they have limited resources and they want to expand their business. So what do they not have? They do not have the bankability of their project. They are being, so the investors who want to invest in them can be small investors as well. Generally, the crowdfunding thing is, as I've studied globally, is around I want to invest like ₹10, I can invest through equity crowdfunding.
Yeah.
Although it doesn't restrict, it provides me also the opportunity of investing a ₹500 or for that matter, 500,000 as well. But the point is that it is kind of very early startup companies, a little risky ventures They're the specific investor who want to contribute either to the innovative thing because of that innovation, or sometimes because of the cause, sometimes for whatever reason. So this is equity crowdfunding, where smaller investors actually provide investment to smaller business units. So that is all for the startups. Now, what is a SPAC? SPAC is not for the smaller units. We say that minimum amount that can be raised has to be 200 million rupees first.
Yeah.
And the second thing that we say is that these are the companies, the merged for which are going to be merged are in operation for, say, certain time. And what is the benefit that can be driven if some, let me take an example. Again, I have taken the example of oil industry. Let me take an example of the pharmacy sector. So there are multiple pharmacy companies, smaller for number of pharmacy companies. If some professional management thinks that merger of 2 or 3 pharmacy companies can lead to a multiple dimension benefits to the investors, they can think of acquiring those 3 companies and getting that merged into the SPAC thing. So it is for the already operational companies getting some benefits and to kind of increase the benefits magnitude. So SPAC is kind of increasing the benefits magnitude. Again, it's not only the simple merger, it can be vertical and horizontal merger. So if I am doing a business, so if I get the horizontal or the vertical merger, the upside or the downside of my supply chain, I'll be also driving the benefits that can help me in reducing my cost. So through that merger transaction, the costs will be reduced and the profits will be upsided, again, with the professional management expertise being introduced in the SPAC. So SPAC and equity crowdfunding are altogether different spaces.
Completely different spaces. Okay. Thank you for a detailed answer on this. I don't believe we have any questions here from any of the participants. So we'll just give it a minute and see if there are any questions that pop up.
Meanwhile, if investors, if some participants can provide some questions, I would like to just say and reiterate one thing once again, and that is that SECP encourages innovative solutions as well, and that is through the sandbox testing cohorts and testing environments. Not only the innovative business models, but for other regulated activities, I would also suggest that please do reach out to SEC and seek explanation. It's sometimes just asking the question that puts you on the right track. So I would just say that reach out to us and do ask.
Yes.
I understand that it is kind of a very new concept and it might be difficult for people to even identify the operational or the practical difficulties herein. But looking forward to
Okay, so Suleiman has a question. Let me just check with Numair because he says that I am unable to type the question here.
Sure.
Numair, is it possible for us to add in? Yeah.
Yeah, Suleiman, you can unmute and talk.
Yeah.
Hi. Can you hear me?
Yes, we can hear you. Yeah.
Okay. An excellent presentation and session arranged by you guys. Thanks a lot for doing that. And I certainly think that the activity of the SEC has really notched up in the last few years. I just wanted to, just bring to your attention one thing which is very important as well. Obviously, SPACs are great, but the thing is, there is this issue with regards to free float in the market, right? A number of companies, a lot of big groups. If you see some of the holdings which they show in their annual reports, and the actual holdings which these groups own is substantially more. And a major reason for that is to circumvent the tender rules and the Substantial Acquisitions Act. So I think the SEC should also try to look at this angle as well, because one of the reasons why all these activities either SPAC or through some other reason, or through some other measure, if you want to create value in the market. But if the sponsors own some of the companies through indirect holdings, and you can still show it that it's the sponsor's holdings, then effectively the value creation is not going to be there. So I would request the SEC, and we can also point out a few companies where this is being done, to have a look at the actual free float of the companies and see that if there is some if they have raised their holdings by not following the relevant laws, then some penalization has to occur, because it's effectively like the rules are not being followed. Just if you could just give a sense of what you guys think on that. Thank you.
Thank you, Salman. I believe I'm pronouncing your name rightly. It is Suleiman, I think. Anyways,
Salman,
so your comments have been duly noted. There is a fact that the free float has to be increased, and we are cognizant of that fact, and we are trying to do whatever measures can be put in place for increasing the free float. That is all the whole essence of the capital market. And we are trying our level best to ensure that this is taking place. With regard to the enforcement piece of it, again, SECP tries to enforce kind of with all due diligence that is possible. But in any form, if you think there is some specific information that you would like to share, do drop an email, or in the complaints section, drop a complaint or an email or an investor's information. We'll definitely take care of that. With regard to the other piece of paper information, I would just like to highlight that in the same context, SECP has also made it easy for the companies to raise capital through either getting themselves listed on the main board, that is the PSX, or try to get themselves listed through GEM, Growth Enterprise Market. We also have introduced two more concepts, one more concept, that is direct listing, that allows any company to offer their share and increase the free float and get themselves listed on the main board of PSX. Again, these are few of the measures that we try to incorporate and inculcate. We look forward that the desired free float is achieved, and we are able to bring the liquidity that is desired for development of any capital market, and specifically for Pakistan's. Thank you.
Thank you, Suleiman, for your question, and Ms. Najia for giving us a detailed answer into this. I believe we have no further questions, so we will wrap up the session. Thank you, Ms. Najia Ubaid, for joining us, for briefing us on this new concept that the SECP has introduced, which was very insightful. Thank you all to all the participants who joined us here today, and we look forward to hosting you again, Ms. Najia.
Thank you, Saran. Thank you, NIC, and look forward to having some fruitful feedback of after conducting such sessions. Thank you, Ji.
Thank you so much. Thank you, guys. Allah Hafiz.
Allah Hafiz.